So in this video, we'll be talking about the highest probability trade setup. The highest probability trade setup. Now, this trading setup is not a reversal setup. It's just based on the continuation. A continuation of our first topic when we talked about reversal patterns. Now, after reversal patterns, I think I have taught you something about this. If it looks familiar, yes, this is an engulfing candle, a reversal pattern. I want you to understand that this is an engulfing candle, but it can also be a morning star, a piercing line, any reversal pattern at all it can be. If you want to check, you can go back to check on that video so that you can understand the very first step of how to create a reversal pattern. I won't be dwelling on that for today's topic. So it's the same thing here too for the bearish reversal. You have a reversal pattern. I got this one wrong. So you have a reversal pattern here like this. Okay, I'll be doing that later on. Okay, so what do we call the highest probability trading setup? It's very simple. Now, after you get an engulfing candle and you get a pattern like this, I told you should do a call trade, right? And at the same time here, when you get the pattern like this, you should also do what? A put trade. Yes, you should do a put trade here. Then after you do that, are you just going to end the trade? No, there are still some opportunities that you can use to make profit from the market, and this is what we are going to talk about today. So one of such opportunity are some specific candlestick patterns. You need this specific, you need to watch out for this specific candlestick pattern. So after the reversal pattern, when you get any one of these candlestick patterns, then you can continue with the trend. In this case, you are not trading in a reversal mode, you are using a continuation of the current trend, and those candlestick patterns are these ones here. When you see this candlestick pattern and you've done your call trade, if you see this candlestick pattern and you've done your put trade, what you need to do is to wait now for you to see one of these. So after this candlestick, it may not come immediately. You may get one or two candlestick or maybe three candlestick. That was why I indicated that with these arrows here. Now when you get any one of these candlestick patterns here, it shows that the pressure from this reversal, from the initial reversal between this for a downtrend and this for an uptrend, it shows that the pressure is still on. Now when you get it, you continue with the call trade and here with the put trade. But you need to understand something. When you get a reversal pattern like this and you do the trade, this becomes the beginning of a new trend. And this becomes the beginning of a new trend. Now you need to understand that before this candlestick form, there was a trend here and there was a trend here. So you need to know the end of the trend, because if this candlestick did not appear fast enough, you'll find out that when they appear, the trend might be over, so you can't use them. So you need to understand such patterns. Well, you understand more when I start showing you pictures and examples of how these things look like in real life. So this is what I just have for you today, how you can spot your highest probability trading setup. Now, it is very good when you see this kind of pattern in a ranging market. You can as well imagine that we have this kind of cycle of uptrend, ranging, downtrend. Although I separated this, but you can see that after the continuation, there should be a loss of momentum somewhere here that forms this engulfing candlestick that brought the market down. It should be something like that. Okay. Yes. Okay, there should be something like this. that brought the market down. After this, an uptrend and the market goes down. So after, like I said, when you get the reversal candlestick and you've done your trade, you wait and then you see this candlestick and then you do your trade. Now, why did I put this line here? This is a support level, and for here, this is a resistance. You need these levels, you need these patterns to form at these levels. Now, this level, it doesn't mean that it's something you draw on your own with your trading chart software. No, if you're using the Bollinger Band the way I use them, if you're using it especially in the ranging market, if you use the Bollinger Bands, then they will act as support and resistance as the case may be, in an uptrend or in a downtrend. So it gives more pressure to the candlestick patterns. If you're using your Fibonacci level, it will act as support and resistance. If you have a round number there, it will act as support and resistance. So in that case, you should go for your trade. The expiration can be 1 minute, it can be 2, it can be 3, 4, or 5. But in a case for you to use a 1 minute expiration, you can see clearly how these candlesticks look different. Why did I say so? Within this candlestick 1, 2, 3, 4, the closest to the key level is this candlestick. You see, the rest have their closing price more higher than this candlestick. So let's say you're in an uptrend and this is the candlestick that appears, not these ones. Now, when this candlestick appears, you can do a 1 minute call trade only when the next candlestick goes down to this support level, and then you can do a call trade and it will go up. But if this candlestick is not appearing there, let's say it's appearing upward like this one, the closing price is up here, you know one thing is this: when the closing price is up here, it is a 50-50 chance that the next candle will be a bullish candlestick. Yes, it is a 50-50 chance, because every candlestick, every market does not move in a straight line. It moves up and down, up and down. So when this candlestick appears, it might be time for it to come back down before going up. In other words, you need like 3 minutes expiration time, 4 minutes, 5 minutes expiration time, so that when you enter your call trade, it might go down and then it goes up within the expiration time that you have set up. The same thing is happening here for this kind of candlestick. I know the line is here. Yeah, it can be here, it can be anywhere, it can be anywhere. For something like this, now you see how this candlestick broke the resistance level. With this, now you can go for 1 minute with this, 1 minute with this, 1 minute. Why? Because they are closing very close to the key level. Now, like I said, mind you, the key level does not mean it's only a support and a resistance level that we are going to pull out ourselves. No, it can be what? An EMA, a Fibonacci level, a fair value gap. It can be any kind of key level, any kind. When you get this key level, you have this setup, then you are ready for a continuation of the trend. Now, I have done this. I am going to show you some examples and some pictures that I have taken in the past, and also some videos that I took. So let's watch and see. Now we have this picture here. I want you to understand, I want you to see the similarities between this picture and this pattern. Forget about this for now. Let's focus on this. Now, as we can see, we had a downtrend, we had an engulfing candle or any kind of reversal, and we have had an uptrend. So let's see what's happening here. We also have a downtrend, right? And now we have this engulfing. I'm going to make this better like this. Okay. Okay. All right. Now we have a downtrend, and we have this engulfing pattern, which was supposed to be a morning star, but no, it's not really that strong enough to be called a morning star, because this candlestick high is not closing above this one, this candlestick open. So we call this an engulfing candle. It's also a reversal pattern. Now, what did we see next? Let me put the key level. Let's put our key level. I'll plot our key level like this. We have this one here, and we have this one here. Oh, sorry. We have it here at the week. We also have a level here at this week. Now we have one at the middle of this huge candle. At the middle of every huge candle, you have a key level. We have one level at the opening price here, and we have another level at this week, and there is also a round number. Now we've gotten the reversal pattern. So what we need now is a candlestick that will retest the reversal pattern and then goes up. So we got it with this candle. Now this is not our pattern we are looking for. This is just the how to trade the reversal pattern. Now if you want to, when you get a candlestick like this, you see that the closing price of this candle is far away from the key level. You can wait for this candle to come down. When it gets to the key level, you can do your trade, or like I said, you can do trade for 3 to 5 minutes. But this is not the pattern we are looking for, right? We are looking for that next movement after we have trade, after we've got, let's say we made a trade and we got this in the morning. We are not going to stop, right? We want to get another trade. True or false? True. Now we need candlestick. We need to see a candlestick like this. You see, like this. When I see a candlestick like this, I want to go into the trade. Now if you look at this candlestick here, this closing price is also forming a level. These two candlestick closing prices forming a level. You can now see that this candlestick interacted with the closing price. That's why you can go here. This candlestick also interacted with these 2 wicks that are forming key level. That's why you can go up. And now apart from this, you can also see another level here. You can see this candlestick forming a level here, and this particular candlestick, like what I have shown before, that particular candlestick, which is this particular candlestick, which is something like this. You can see it, but then the level was up, something like this. It doesn't matter, the level should be around, and you can see that this candlestick has appeared, and so we can now go confidently. This is the main setup. This is the main reason for the video of today. We can now go confidently with the trend. You understand? This is what I am trying to say, because we had a loss in momentum in trend. How do we know that this is a loss in momentum in trend? Because this candlestick here has taken this green red has taken some momentum from the candle. This is the beginning of an exhaustion in the trend, but this is not an exhaustion candle. But you see this big candle, small, it makes no sense. It's supposed to be big, bigger, but now it's big here, smaller and smaller. So we're seeing a loss in momentum in this trend. So after this loss in momentum, what do we get? A reversal, a setup on trading the reversal, which is this, and then we get the continuation setup, which is, if you miss this, you can go with this. If you miss this, you can go with this. But at this point here, I wouldn't go with the setup. Why? Because at your far left, like I told you before, at your far left, there are levels here. There are levels here that will interact with it, and at your far left, this becomes, for instance, this is your far left, right? Now, if you are talking about the middle of the beginning of the trend, you'll get it here. But at this point, this trend is ending. it may end. Why? Because there is a level here that may interact with it. So the best bet for you is to wait. If you want to start a new trend, the best bet is to wait for a breakout. When you get the breakout, like with this candlestick, fine. You can say, okay, you now realize you're not at the ending of the trend is still active, but you need to understand that this level may bring in sellers. So between here and here, when you see this candlestick at the beginning, what you do is go up. But when you see it at this area, don't go. You have to wait for the breakers, you have to wait for the reversal, you have to wait for any other setup. But the breakers will be something I'll talk about in other videos, not this one. So that is what I have for you. And then for the downtrend, I'm still going to show you some few examples. Now, this is one example that this is a trade that I took. Now, if you look closely, once again, we have this reversal pattern here. We have this reversal pattern here, right? We are the downtrend from here, the downtrend. Now we have this reversal pattern, evening star. Now let's look at the wick once again of this candlestick. Here is the wick here. You see how it touches. Now this is how to trade the engulfing candle. When you see this candlestick, you can go with a call here, but this is not the topic for today. This is how to trade the continuation. Then you see a candlestick like this, you go 1-2 minutes call. It's very, very simple. This is the same thing we have. This is the same thing we have every time. It happens every time in the market. So that will be that. Let me go back to another example. Now this is an example of a trade I took. So I'm going to play it now. As you can see, it's not really a strong trend, but then I saw the opportunity and I took the trade. So let me play it so that you see it. Now, as you can see, we had an uptrend. Now we had a ranging, so the market will be going down. So now I'm looking for the reversal. The reversal is happening now within this tower top. You see, these are all reversal signals. They may not be popular, but we call this the tower top. So seeing this, I'm seeing a breakout. What I'm doing now is I want to plot some levels to give myself a kind of picture of the structure of the market. Now, if you look at this part of the market, we can see this downtrend and this engulfing or this breakout. And after this breakout, we can see from here we can see the first sign of how to trade the engulfing. When you get this breakout, you see this wick here interacting with this level. You can go here, and after this kind of candlestick, you can go. But I missed this because of time. But now at this, it's happening again. It's happening again. So let's watch what I'm about to do now. I'm going to plot my levels to, you see, that's the first level I'm plotting, and the second level I'm putting it upward. You see, now I got a very tiny range. Look at it closely, a very tiny range, and I'm doing the put trade. You see, the put trade. Why? Because I have seen this candlestick, although it has a wick lower, but it is the beginning. Look at the end of the trend here. This is the middle. This is still the beginning of the trend. So I'm doing a put trade to follow the trend, and this is how you get your trade in the morning. This is how you go about it. So this is it. Okay, this is it. Okay guys, I'm sure you've gotten what I have been trying to explain. We are not talking about this setup. This setup is very good, yes, but we're talking about this next setup that comes after this setup. So I hope you've gotten something from this video. So until next time, I want you to like, share, and subscribe to this channel. If you haven't get the ebook and you've joined the mentorship program so that you can take your trade to the next level. So until next time, take care and bye bye.